What's up, everybody? Welcome to another one of Dave's Daily Dives in the Charts, where I take a look at the major stock market indexes, see if there's some areas of resistance or support heading right around the corner, give you some technical values. But I don't stop there, because I give you 5 Zacks rank #1 strong buy stocks that are breaking out to new 52-week highs. That's useful because if it's a Zacks rank #1 strong buy, that means it's had earnings estimate revisions to the upside. So perhaps the move to 52-week highs is in fact justified. All right, so first we're going to kick things off with the Russell, the small caps of the Russell. Now you'd think that as we get closer and closer to the prospect of tax reform and a bill getting passed, that the small caps would be rip-roaring and ready to rock. For some goofy reason, they just haven't really been participating. So basically, since the beginning of the month, haven't done much. I think maybe it's a wait-and-see sort of game here. The reason why, obviously the small caps are more domestically inclined, so they're going to benefit the most. We're talking huge revenue growth potential for next year and EPS growth potential for next year should this tax bill get passed. I've seen some estimates as much as a over 40% increase in the small cap earnings, not 14, 40 potentially as a result of the bill. I know it sounds like a huge number, but that's what some of the initial reports are that I've seen. All right, let's look at this now. I've been playing off of this fib here. Kind of got into no man's land, right? I could almost, it stopped shy of the 38.2. You could draw, I suppose, the 23.6 in here somewhere, and it might get close. But let's not try to overcomplicate this. The real primary target that I have is this 38.2% extension at 1578. Note this intraday move down to the 50-day. Last time you were in the 50-day was here in November, trading below that level. Another rally up and failure, and then it's coming back down. So I'm really looking for this to retest the 50-day. It's getting awful close. 1504, so this could happen tomorrow. You have this previous high here, sort of 1515, but honestly, could chop around within all this. We've got a lot going on here with the Fed. We're expecting to get a rate hike here, and we're going to get that news tomorrow, I believe. But it's all expected, and really anything happening on tax reform, the small caps are going to rally. It's just that simple. So I think maybe this is a little bit of a calm before the storm, giving you a chance to get long some small caps if you're not already. Very interesting move here on the S&P 500. We've hit the target. Now, I love these targets because I draw these, here, right? And then when I get these extensions that get hit, I just feel great about it because it's not like I drew these lines after they already got hit. So I had the previous high here as a target, a little pullback to the 23.6, and then now we've hit an extension. So we've got to talk higher and look at the 50% extension. So I could add that to the chart here easily. And we're going to do that 50% extension. See where that takes us. That takes us to 2687. So your next target to the upside, 2687 on the S&P 500. If you're looking for some downside support, this intraday candle down here, of course. So getting down to this, basically 2600 level. And then you have the intraday, or you have the swing low rather, in the 2625 area. That could potentially be some support should the market sell off a little bit. But right now, it's really not selling off at all. Other thing I want to look at really quickly here is just the Nasdaq Composite. So tech is not one of the main beneficiaries of this tax deal. It's really the small caps that are going to benefit the most. Now that's actually kind of broad there, right? So small caps are going to do better than the large caps. Tech is, in terms of which sectors, is probably not going to do as well. Basic materials is going to do pretty good. Energy companies, because you got sort of these domestically inclined energy companies, plus you have a little bit of a rebound in that sector overall, but also smaller banks, that kind of thing, because you've got the rate cycle kicking back up, and hopefully the economy getting a little better, and then the taxes also. So you got kind of a three reasons why that should be good. So here on the Nasdaq Composite, I have a previous move and then big extensions. So the 50 gets taken out, and then it approaches the 100%. So really the target on this is 69.43 rather, which gets awful close to that 7,000 level on the Nasdaq. I think if we get tax reform passed, we're going to see that in very, very short order. Okay, now let's take a look at 5 Zacks rank #1 strong buy stocks breaking out to new highs. The first, Famous Dave's. I wish it was my Famous Dave's. I'm not the Famous Dave they're talking about. This is the barbecue joint, if you've ever seen them. I know they've got a bunch of them here in Florida. They are very common in the southeast, assuming that Dave wants to load here. Maybe we'll start off with, there we go. There's Dave. So huge intraday spike yesterday. Look at this. Crazy move to the upside. You got a big gap up here. Maybe a little bit too hot to handle here, folks. But I like pointing out these things that pop up on the radar, because look at how long the Dave's was just pretty much doing nothing. And then all of a sudden you get a big, huge spike up there. That's Famous Dave's, ticker DAVE. Maybe a little too hot to handle. What you like to see here, and so this is a simple screen that I run here. I look for Zacks rank #1 strong buy stocks, okay? And I look for them with momentum style scores of A, typically, that are right near their 52-week highs, okay? Sometimes I get rid of the momentum score because, you know, if they're at 52-week highs, they're at 52-week highs. So sometimes you get something like this where you get a huge spike upwards, right? And it almost looks parabolic. That's got to make you a little bit nervous, right? So when you see a stock like this that's just skyrocket up higher, that may not be the one that you want to go jump elbow deep into, right? What you want to see in charts, specifically the Zacks rank #1 strong buys, or nice, smooth sort of bottom left to top right motion is what you're looking for, because it's about continued earnings estimate revisions to the upside and positive momentum in the underlying business, not just a flash in the pan sort of thing. So you got to be a little bit careful when you look at some of these. So that was a teaching point, my friends. The next one is Emergent Biosolutions. This ticker is EBS. And for some reason, everything's taking a little bit longer to load up here today. I apologize. It just happens to be our lucky day, I believe, here for our videos. Okay, so this is what I mentioned before. You want to see a lot more of this bottom left to top right. So this is a longer term trend that's been intact for a long time, and earnings estimate revisions coming to the upside, which has helped to support this move. So you see the 50-day moving average comes into play on multiple occasions, most recently in mid-November, but ended up finding a bid. I'm pretty sure if I drew some fibs, we get some neat levels here. I don't even need to do that. Look at this intraday spike higher to new 52-week highs. Market comes back, fails again, and then now to the upside. This is a breakout. This is something you could buy here. You could put your stops just shy of this 52-week high, even down at 43, something like that. Nice, tight little stop. You can allow it to run. If it comes back down, hey, the run's over. That's okay. And if it does keep on running, then you can certainly hold on for the ride a little bit. The other one I'm looking at here is First Solar, ticker FSLR. Now, a lot of the solar companies recently have been popping up not only on my radar here with Dave's Daily Dive, but they've also been popping up on my Momentum Trader screen. So when you start to see not just one stock popping up on this list, but multiple stocks within the same industry popping up on the list, it tells you that you should start digging in a little bit to see what is happening. So here, leapfrog the 50-day in May, came back down to flirt with that into September and October, and then all of a sudden it's like just shot out of a rocket, a gap up and go, another consolidation, dip close to the 50-day, and then it's bid again. So this stock sort of has a tendency to move quick and then, consolidate for a little bit. So now it's moving pretty quick. I'd be a little bit cautious of chasing the breakout on this particular stock. I think that you can wait for it to come down below 65 to get a little bit of an entry. Also look to see what this 50-day moving average does, because if it gets closer to that 50-day moving average, that could be a much better position, or a much better entry rather, for you than trying to chase this thing that has gone up from 57 all the way up over 70. Now here we got Groupon. You've all heard about Groupon. I'm sure maybe you even bought a Groupon or two. It's another story of a stock that was really downtrodden, but then caught a little bit of a heartbeat. Mid-June, gets over that 50-day moving average, comes back down to test it in the end of October. A couple of spikes down. So this certainly isn't for the faint of heart. You can see all these deep retracements that the stock's taken, getting back closer to that 50-day moving average. Here you can do the same thing. It's about 30 cents off of this 50-day. I would wait to see how it interacts with said 50-day before initiating any sort of position, but something to keep an eye on. Put a little price alert if Groupon does pull back to that level, may be worth a shot. And now the last one we're going to do is Skechers. So this is a shoe company that also had a fantastic run a few years ago, was really gaining market share in the shoe business, and then kind of ran into a brick wall, started to go sideways, started to go straight down. Earnings estimates went to the downside, and it got pretty bad. But look at the big action after some good news. Huge gap up on earnings. They retested that gap right around 30 bucks, got bid again. Look at how it takes out the highs. So this is something you can chase. You can buy this, put your stops shy of the swing low, so basically under $34. A little bit more than 10% cushion to the downside, but that's okay. Ride the breakout, hope it continues. It does look a little bit overbought right now, but that's what you should expect on a stock that's breaking on through to new 52-week highs on decent volume. Okay, that's all I've got for you here today on Dave's Daily Dive. Remember to follow all my antics on Twitter at Bartosiastics. Of course, I also run the Surprise Trader as well as Momentum Trader here on Zacks.com. So thanks so much for hanging out with me here today on Dave's Daily Dive. I will talk to you all in the future.